We had macroeconomic data that came out on Wednesday, and that was the CPI as well as IIP numbers. The CPI has managed to ease to a 10-month low, and IIP as well fairly steady. Let's get in Poonam, who joins in with a wrap of all the internals as well as what these numbers mean. Poonam.
Well, thanks so much for that, Awan. In fact, Awan, if you look at the CPI numbers, well, it has come in at a 10-month low, primarily led by a good amount of respite on the food inflation front. But the core inflation, despite easing to nearly around 5.9% versus 6.3% in the earlier month, does remain fairly elevated. And of course, we do know the risks that could emerge further in terms of the inflation, be it the MSP hikes, be it the high oil prices, INR depreciation. All these factors, and of course, the high oil prices, all these factors would be of course washed out for in terms of inflationary expectations and what RBI or government may in fact take as measures in order to take control of the overall macro situation. On the IIP front, we did see a steady IIP growth coming in at 6.6%, fairly in line with the consensus as well as 18-hour poll estimates. If you look at the cumulative IIP growth, that stands fairly better at 5.4% versus 1.7%. Manufacturing, infra and consumer durables were good. We did see some amount of slowdown in terms of the capital goods segment. Of course, there has been some amount of respite even on account of a favorable base on IIP. Besides IIP and CPI, we also did see the August trade deficit narrowing slightly during this month versus the previous month. So I guess some amount of respite surely from the current macros. But going ahead, all focus would be in terms of the PM Modi need, taking into account the economic measures that probably we may see being announced over the weekend to address the current INR depreciation in the high bond yields. But various economists do mention that the markets are of course factoring in a 50 bips rate hike. There is a possibility that in the October policy meet, RBI does hike rate by 25 bips as well as change the neutral stance. Some economists do believe that RBI may even act in between policies. I guess we should be watching out for those kind of measures right now, given the INR depreciation and the kind of overall macro situation that we are seeing.
Yeah, indeed. Poonam, thanks much for analysing that data for us and, of course, the internals of the CPI as well as IIP. Let's chat about all of this with Sandip Sabharwal. He joins us on the show right now. Sandip, morning. I guess a big talking point in everyone's mind is what's going to happen with the Prime Minister's economic review meeting over the weekend. Do you think there will be some constructive measures on how to tackle the rupee situation, the impact on CAD, and RBI rate action as well, it seems, is on the agenda?
Yeah, so my view is that the government has done a lot to revive the economy, so it's very tough for them to do something in the immediate basis which could do something which will change the dynamics of either the current account deficit or the way the economy is behaving. So I think these review meetings are good to see if there are some projects etc. which are stalled or some segments which are stalled which can be restarted. Except that, I don't think there should be much of an impact. And this entire view on a rate hike to support the currency is, I think, totally fallacious. And it is, I don't know why. In fact, I read so many notes of all the economists of broking houses. Everyone seems to be propounding this theory. It really doesn't work. So the currencies were moving in a contagion. By the time the RBI policy meet happens, you might have the rupee maybe up by 3-4% if the dollar index reverses, which is a possibility right now. So I think they are so given the CPI print and the fact that X of fuel, all other inflationary measures are down. In fact, if you see the composition of CPI this time, food inflation is under control, housing inflation has come off, core inflation has come off. So I think a lot of these segments have come off. So RBI's mandate obviously is more on the inflation front rather than trying to control the currency. So let's see how it goes, but there's no actual basis for these moves.
Sandeep, if we dwell more into these numbers, and we'll get to stock specific very soon, that now we spoke about high growth rate and we are talking about core inflation coming down. There's a mismatch over there. We are talking about crude oil price, currency, negative, and we are seeing inflation cooling off. How these numbers should be interpreted, because market is surprised that how come inflation numbers have come down.
That's because a large part of the CPI basket is food and food related, and food inflation is obviously under control. And there are some efficiency gains which have got built into the economy. So that's why what we see is that the inflation trajectory is not as high as it used to be earlier. Maybe it's some efficiency gains because of GST or general gains in the economy. So, but the companies are getting pricing power. So, if there is a input cost inflation continues to be very high, which is not there today. If you actually remove crude, a lot of the metal prices, a lot of other prices are actually down. So, I don't think there is any big inflationary pressure on the economy.
What about the overall market? I mean, Rhythm Desai, of course, of Morgan Stanley has put his Sensex target at about 42,000. But much in the near term, you think at around 11,350, much of the damage is already done? Is it already in the price, or is there significant more lower side to this current level?
No, there shouldn't be significant lower levels, because the emerging market basket, which is what we should actually track, has corrected 50% of the entire move since 2016, which started in 2016. So the way this trade talk dynamics are going, and the extreme oversold positions and extreme low positioning of investors in emerging markets, I believe that the worst of emerging market sell-off could be behind us. So if that is the case, we can't build a scenario that India will correct significantly. So we have outperformed to a very great extent. We might underperform. Like if the emerging markets go up by 10%, maybe we won't go up by 10%. Maybe we go up by just 5%. But then there's no case for a big sell-off.
Quite a sober reply from Sandip for someone else's view. Otherwise, it's quite critical. But maybe it's matching.
He didn't react to Rhythm Desai upping his target to 42,000.
Good morning, Pankaj. Let's get in a word then as to what your assessment is of the macros. We had the IIP numbers coming in. CPI has managed to ease quite significantly. And the talking point as well in our studios is all of the commentary that's anticipated tomorrow with respect to the government giving their assessment of curbing the rupee fall, as well as looking into crude oil prices, the Prime Minister's economic review. What exactly is it that you're anticipating?
So hi, good morning. So from an overall perspective, we look at what we sense is that if you sort of broadly dissect market into three broad variables, one is your domestic growth. I think we had one of the fastest or quickest kind of a growth in the last quarter, and about 15% kind of a bottom line, 24% kind of a top line growth last quarter for Sensex companies excluding banks. And outlook for the next 2 years in terms of growth is fairly robust at about 20% kind of a CAGR kind of a growth. So earnings domestically are in absolutely fine shape. I think domestic sentiments are also relatively far more fine. I think where the challenge is coming is especially on the global sentiment side, and it is very difficult to sort of take a call in terms of how these trade negotiations will sort of pan out, and the consequent impact it will have on the Indian rupee, and vis-a-vis some impact on crude, and both of them sort of impacting our domestic inflation scenario. And I think we have seen decent amount of crack in the market, but not good enough for a lump sum investment. So we would expect that the markets to sort of consolidate for the next 1 or 2 months till the time we get clarity on the global situation. I think domestically, like I said, we are doing absolutely fine. I don't see that, or I don't sense that the RBI or the government will be very keen on sort of looking at or protecting the rupee in a big way. But we would expect that a sharp bounce to sort of happen. That is what we had seen in 2013 as well. But having said that, I think globally things are still volatile, still shaping up. So it is very difficult to take a directional call on the markets. But having said that, we expect that 11,000 levels will be held. And within sectors, I think there are some sectors or pockets which have not really performed in the past few months, which we expect to sort of do well. So one of them is auto. We have not seen really a decent price performance from most of the auto players. And given the fact that we are heading into a festive season and overall monsoon and most of the domestic variables have been good, we would expect a decent amount of sales, even though there is a concern on the margin front, given the fact that some of the commodities have inched up. Then another sector which we sort of like is cement. I think there also we would expect that from the construction activity to sort of overall pick up in the next few months. And in addition to that, we had seen good volume growth last quarter. I think the only challenge is on the pricing side, wherein we feel that the pricing could firm up in the coming months, and which will be a positive. I think besides these two sectors, we would expect selective performance from pharma, especially exporters. And domestically, we would expect that most of the players will keep on sort of delivering decent set of numbers with 10 to 12% kind of a growth. Though some of that is baked in prices, but we expect that segment to sort of keep doing well. In addition to that, you can look at certain pockets, like for example, the hospitality space has not really done so well. We have seen decent amount of price crack also. And we would expect that structurally, these are the segments one can sort of look at. But having said that, like I said, we would expect markets to sort of consolidate for the next 1 or 2 months, because the global situation will keep evolving. I think domestically we are doing fine, so that is not a bigger worry for us.
Okay, let's talk about the three stocks, and one case in point on our radar is BOB. Now, it's interesting the way some of these banking stocks are coming off. We were talking about as to how in the last 2 months there's names like ICICI Bank, or for that matter Axis, that have really outperformed. They too have begun to see some amount of profit taking set in, and BOB was no exception. It's fallen to, in fact, a 6-week low. It's breached some of the key technical levels like its 100 as well as 50 DMA. Before I go to Kunal and get a better sense on which way the Nifty Bank is headed, Sandip, to you, do you think this decline is going to get aggravated in some of these key PSB names, or for that matter in ICICI Bank and Axis, because there would be a series of profit taking coming in? People have seen a lot of returns of late.
I think it's the way the market behaves. So what happens is that a lot of other stocks were correcting, these stocks were holding on. So in the end, when the panic sets in, so people start selling off those stocks which held on. I think I would think that is the bigger phenomena rather than any change. So these stocks continue to remain buy on dips only, because they will be the bigger outperformers over the next 2-3 years.
So what would you buy, and is this the dip that you're going to buy, or do you think they are going to dip further from here?
I don't see any significant dip, so I think given clarity coming in Axis Bank, so that's well placed. ICICI Bank is well placed. Bank of Baroda, I'm not sure whether that extension of the CEO has been announced or not. So once that comes, I think it will perform. So I think that's some uncertainty going on in Bank of Baroda. So once that gets over, it's well placed.
Actually, correction in Bank of Baroda was in line with when this announcement related to power sector did come in. Is it because this bank has a lot of exposure to power sector, that's why it's correcting?
No, nothing. And most of these banks have actually written off most of these power sector loans. So why this news keeps on influencing bank stocks is tough to understand, because actually fundamentally there's not much change at all.
All right, that's the take coming in on some of these banking names, but a whole host of stocks as well to keep an eye out on, and let's just flag them off for you. As we just a short while ago spoke of, it's Bank of Baroda as well that's in focus. The stock in the previous session fell to a 6-week low, one of the top drags on the Nifty Bank Index. Volumes as well supported, close to the highest in the last 1 month, as well as the open interest, which was up about 13%. Meantime, there was JSPL as well. The stock rallied to a 2-month high. In fact, there are discussions in ET Now exclusive talking about the overall global asset rejig that's on the cards. It surpassed its 50 as well as 200 DMA quite comfortably, and valuation stand at about 11 times the FY20 PE. And then there was Radico Khaitan. Stock fell to close to a 3-week low. 3 consecutive days on the trot that it's fallen flat on its face, with the cabinet hike on the procurement price of ethanol. Sandip, would just like to get in your thoughts with all that's going on with the procurement price for ethanol. What exactly is it that you've made of reading into some of the statements and what it means for the space?
I think it's extremely positive for 2 segments. One is the companies which make the ethanol plants, and secondly the sugar companies by themselves, because the increase in profitability because of this is going to be significant, and next year's production of sugar cane is going to be very, very high. So if a lot of it can get diverted to ethanol, And at the current price, whatever they have proposed from sugarcane juice at 60 rupees, it's a very good rate. So my guess is that this could actually start a mark of the bottoming of the sugar sector also, and that's one sector which could become interesting going forward.
So what do you buy? The big ones, Balrampur, Chini, etc.?
Yeah, Balrampur is safer to buy because it has no debt on the books. So it's a very clean company. Many of the other companies have got huge debt on their books. So Balrampur obviously is very good. Triveni Engineering and Industry is good because it's got an engineering segment which is doing extremely well. Sugar was a drag, but that segment is doing well. So combination of both doing well can create huge value. And among the equipment suppliers, obviously, given the interest, so I was just reading that around 150 plant applications have come for the government subsidy and the subsidy which the government is going to provide. And each plant is 200 to 300 crores in terms of setting it up. So it's a huge opportunity for companies like Praj Industries. So I think that's one stock company which could get huge orders, and the stock could do well.
But what about liquor stocks? Is this decline to be bought? Would you buy more of Radico or USL, or would you say avoid it for now because this ethanol adjustment will take time to play out?
No, this news will actually be negative for them. Because,
yeah, that's what I'm saying. Would you buy the decline or would you avoid these stocks now?
So right now they should be avoided because they are trading at the upper end of the valuation band.
Okay. Okay, the pre-open rates, that's a significant relief coming in on the currency. 51 paise move, and you know, the fact that we were staring at 70 to 50 levels just about 3 days back, seeing the rupee come down all the way, or rather strengthen all the way to 71.67 is quite a decent move coming in, and substantive at that. But let's see what transpires from the PM's meeting over the weekend. I guess this is also a sentiment move in anticipation on what the meeting outcome may be, which is why you're also seeing the currency move the way it is. Having said that, globally as well, things have been much calmer for the last two trading sessions. That rubbing off in equity markets, and almost that chicken and egg story playing out between the currency and equities. And even the Nifty has started off on a positive note. But again, these are just the pre-open rates. I just quickly want to see what Sun Pharma may be up to, because that's going to be a key stock, I guess, in focus before we move forward and discuss some of the other names with our experts, because Sun Pharma has got a US FDA approval. It's an in-licensed Xelpros approval that they've got from Spark in June 2015, and this could definitely be meaningful for Sun Pharma, about 1.5% higher for Sun Pharma in trade. The other one, I guess, is Tata Motors. There's a Fitch downgrade, but you know, like any ratings agency, they've been a little behind the curve. I don't know how much more Tata Motors can actually go down from here. In fact, it's seeing some freaky rates there, 7% higher for Tata Motors. I guess we were right on that one.
No, actually, you should not go by this rate, because many a time, Sasha, you know, during pre-opening, the rates might be not something which, you know, markets would open up. But you know, what's your take, Pankaj, on Tata Motors? We are discussing about how rating agency has downgraded its paper, and we are also talking about rating agencies being behind the curves. What's your take as an you know, house call when it comes to Tata Motors? Is this you know, a bottom? Is this a price where one can say that all the worst announcements and, you know, probably for next 1 year, everything which is bad for this company is in price?
Actually not, Siddharth. So this was part of our portfolio and we had removed it some time back. Within Nifty, if you look at, this is the worst performing stock, down about 40% odd. Now within the portfolio, if you look at domestic as a segment is doing extremely well, both CV as a segment and also the passenger vehicle as a segment. In fact, in CV, to our positive surprise, the margins are fairly robust, given the fact that there were concerns that the company might offer higher discounts to sort of gain market share, which it had lost some time back. But I think the bigger concern is on the global side. One is that the company has lined up big capex globally, and EV is still an evolving space, so which is where we are slightly not very comfortable in terms of how what kind of payoffs we might get, given the fact that the company is going to aggressively spend in the next 2-3 years. And that is where I think the bigger concern is coming from. And then you have other markets wherein the margin challenges are there. So, for example, China is a big market for them, and that is where we are seeing concerns on the margin front. So, if you sort of put it or sum it up, I think it is still challenging for a stock to sort of buy at this level, and which is why I think, given the fact that it has declined 40%, some bit of a technical bounce back can happen, but we don't expect a price performance from the stock for the next 2 or 3 years. So, which is why I think besides technically, one should not be really sort of chasing this stock at this point in time.
All right, Sandeep, would like to get in your thoughts on Sun Pharma as well. We're talking about the big reprieve coming in with respect to the US FDA clearance and the in-licensed drug from Spark as well, getting the approval there. How are you looking at the long-term story for Sun Pharma?
Yeah, I think the long-term story is becoming extremely positive. So that's what is happening, that slowly all things are falling into place for a majority of the pharma companies. And that's getting reflected in the prices. These stocks are still under-owned right now. They were heavily over-owned 3 years back when people were very bullish. Now people are still skeptical. So I think on every dip, these stocks will remain a buy.
And would Sun Pharma be the top pick, or would you choose an Oro or Lupin?
Yeah, so Sun Pharma remains the top pick because visibility is better and the management commentary also has been much more positive, and followed by Dr. Reddy's.
Okay, that's the take coming in. Thanks very much, Sandeep, for joining in and giving us your market view as well as view on individual stocks.